Daddy, Sammy said, Luis Garcia. ¿Qué pasa, amigo? Armish Shahig. Amir Shahig. Kevo. Nani Flex. What's going on? Brian, Luis, Jeremy, Carmen. Good evening, Carmen. Mike in Love. How you doing there, Mike? Back again, huh? Steve Mora. Vale, Trey, Ray, Sam Baker. Good evening, everyone. Cornell. Okay, Kay Van, what's going on? Julie, good evening, Miss Julie, and how are you today? Joe, Orlando, what's going on? Twisted Strains, Bert, what's going on there, Bert? Kay Van, let's go. Let's get the ball rolling. Let's move. Come on. Robert, Mark, good evening. Alrighty. Good evening, everyone. My name is James. This is Dividend Stock Talk, brought to you by The 10-Minute Trader, where I invest in dividend stocks for weekly cash flow. Not a lot, young man. Thank you, young man. Oh, dude, I'm in my 60s. I'm not quite sure if I qualify for young man anymore. Who do we got over here? Orlando wants to take a look at UPS. Going to be the first one we look at in a little bit. Orlando, thank you. Apollo Rocket, good evening. William Wong, good evening. Julie Stevens, thank you. Tree, interesting name. What's your name? Tree. All right. Mizzen, how are you doing today? All right, so first thing we're going to look at, let's look at Siri first. It's already there, and then we'll take a look at UPS. Okay? So, first and foremost, like I said, my name is James. What I'm looking for is a simple, safe, predictable, consistent 1% per week. Say no to cyber. Okay, no. Corazonito. Okay, cool. So, simple, safe, predictable, consistent 1% per week. The trading strategy I'm going to show you this evening was created for my 9-year-old daughter back in 2008 when she was 9. She's like 26 now. Go figure. So, simple, safe, predictable, consistent, and no way for her to lose. So for all that, Alan, thank you. For that, you get 5 rules. And the rules are very simple. So if possible, it would be really, really great if you guys would just listen to the rules, hear them, understand them, and let's go from there. Rule number 1, never buy anything you don't want to own long term. Rule number 2, never sell at a loss. Kind of defeats the purpose of the whole game. Rule number 3, this one's a doozy. Make sure the company is consistently profitable. This one boggles my mind because you will see throughout the night, people are going to ask to take a look at stuff, and then you can be thinking, why did you put your money into this? Is it consistently profitable? It either is or it isn't. Rule number 4, weekly options only. Now, the reason weekly options only is I want weekly cash flow. I grew up in the 60s, 70s, and 80s. We went to work 8 o'clock Monday morning, and we finished work at 4 or 5 o'clock Friday afternoon. I'm used to it. So that's what I want now. I want to get in, I want to make my profits, I want to get out, and I want to have a good weekend. Simple, right? Brody, can I have mod, please? Brody, I'm not quite sure what you mean by that. Okay, Brody, can you explain what that means? All right, that being said, first one we're going to look at today is going to be Siri. Yes, I do have some of those. No, I'm not giving it as a tip or anything like that, just an observation. Now, I said weekly option, and rule number 5, I forgot that. Sorry, rule number 5, make sure all the numbers work. We're actually going to do a couple of sample trades this evening so you see how the process goes. See how you pick the stock. Now, I picked the stock on 2 criteria and only 2. Now, we check every week. This week, there's 10,354 different companies. That's a lot. I only look at about 300. 97% of all the stocks I don't even bother with because they just don't fit what I'm looking for. Consistently profitable, weekly options. That's it. Consistently profitable weekly options. Now, when I say consistently profitable, I'm talking 20 years. Stock market's been around for 400. I don't think 20 years of profitability is too much to ask. So sorry, I don't look at these new hotshot stocks that seem to be shooting up like rockets. It's not what I'm looking for. I'm past the point of creating more stress in my life, which means I don't want to sit and wait and worry about what the stock's going to do. Well, you don't get that with companies that are 100 years old. Because a 100-year-old company, well, they pretty much they shook out the cobwebs a long time ago. They're on a straight path saying, hey, we're profitable. We don't need to prove anything to anybody. Those are the ones I like, especially if they're giving me 1% every single week. Now, we're going to touch on that in a little bit as we progress. So let's get started. Can you help me with my portfolio? Sure thing, Brian. Send me your number. I'll give you a buzz. Now, I say that every night. You want to have a conversation? Great. Send me your number. I will give you a call. Hey, Dr. Dev, you're early today. Way to go. Send me your number. I'll give you a call. We'll chat. I promise I'm not going to try to sell you anything. As a matter of fact, I'm not going to try to sell you anything tonight. You get a lot of people on at night and they try to sell you something. I'm not going to try to sell you anything. We all know how it works. We're all adults. I've written a bunch of books, got this, got that, blah, blah, blah. In the bio where you learn about who I am, what I do, and what kind of a person I am. Well, I've been online for over 20 years. I don't hide. You can easily find me, which I'm not sure if that's a good thing or not. But anyway, I got nothing to hide. So I do everything by the numbers. 1, 2, 3. Remember that paint by numbers? 1, red, 2, blue, 3, yellow, 4, green, blah, blah, blah. I do my investing the same way. 1, 2, 3, A, B, C. And it's simple, always the same. 1, 2, 3, A, B, C. First thing I want to do is I want to create a list. Now, the list I'm talking about, a list of stocks that you like. Once you go in and do all your research, is this a good company? Does it make sense? James, do you manage accounts? Orlando, yes, I do. Send me a number. We'll have a chat. Yeah. Oh, that turns off if I don't move the mouse. So everything's by the numbers, okay? So, gotta get rid of that gum. Number 1, come up with a list. Now, the list that I like. Victor, what is this month going to be for me? Victor, I don't know what your month's going to be for you. This is too much math for me. Milano, dude, I can't help you out. I'm terribly sorry. Welcome to adulthood. As an adult, you got to figure out how much time you got to put in every single week based on what your monthly bills are. So if your monthly bills are $5,000 a month, you're working 40 hours a week, getting $5 an hour, that ain't going to cut it. Terribly sorry, dude. You need math as much as you want to complain about it. Seriously. Okay. Number 67 is your favorite. Yep. Do you prefer calls or puts or no preference? I prefer calls because it's a positive scenario. Puts are a negative scenario because you're kind of hoping it goes down. Yeah, I don't like that negative stuff. Is moderator, so moderate basically like is someone says something like me in a chat. Okay, yeah, Brody, you want to do that? YouTube, other channel. Not this YouTube channel. This YouTube channel is relatively untainted. The one over there, that's been around for like 20 some odd years, and I got a lot of weird people coming up on that YouTube channel. Rocky, it's not about math. I have a mathematical degree and still can't keep to a budget. Dude, I can't help you out with that. You know what I say to that one? Stop buying stupid shit. Simple. You make money, you have necessities. There's a huge difference between a necessity and a desire. Okay, you want the new iPhone? You don't need a phone. You need food, shelter, clothing. That's all you need. Everything else is a luxury over and above that. Uh-oh. Alpha, that's just inappropriate, dude. I don't tolerate that stuff. That's just uncalled for. Okay. I don't tolerate that kind of behavior. That was just uncalled for. Sorry. Someone said something rude to someone else, just totally uncalled for. All right, so anyway, Milano, can't help you out, dude. You got no choice in the matter. As an adult, you have to come up with the math. Sorry. One Love, we'll take a look at Dow in a little bit. All right. Rocky, I know I do. Don't worry. Yep. Thank you. You're welcome. Anyway, that being said, let's just jump right in. We're going to, it's kind of like a good movie. Any good movie, everything will come together at the end and it will make sense. So every time I look at a stock, it's always the same thing over and over and over again. Okay. Number one, come up with a list. Make sure it's a company you want to own. Number two, take that list and put it into a calendar. And the reason why I want to put it into a calendar, let's get out of this for a second. Okay, here's your typical calendar. Okay, your typical calendar. September 2025. We are right here. All right. Now, this calendar is an EX dividend calendar. Basically, it tells me when a company is getting ready to pay its dividend. Now, the name of the channel here is Dividend Investing for Weekly Cash Flow. Okay, so I use pre-qualified dividend stocks along with a trading strategy called a covered call at a specific time directly related to the calendar. Why? Because most stocks, especially dividend stocks, have a tendency to be repetitive, consistent, and predictable. That means they do the same things over and over and over again. Because every 90 days, once per quarter, first, second, third, fourth quarter. First quarter, January, February, March. Second quarter, April, May, June. Third quarter, September, October, nope. July, August, September. Fourth quarter, October, November, December. So first quarter looks the exact same as the second quarter, which looks the exact same as the third quarter, which looks the exact same as the fourth quarter. There's 266 trading days in a year. Each quarter has 13 weeks or 66 trading days, roughly. Okay, so week one on the first quarter looks the exact same as week one of the third quarter, which looks the exact same as week one of the second quarter and the fourth quarter. So it's a revolving door, merry-go-round, the same thing over and over and over again. So we got T. Rowe Price, Coca-Cola, Kimberly-Clark, Lennar, McDonald's, Roper, Medtronic, so on and so forth. Every 90 days, they will pay a dividend. Well, here's the thing. Every 90 days, just before the EX date, the stock has a tendency to go up in value. So when the stock goes up in value, that's the part where I want to jump in, grab my 1% for the week, jump on out, and then move on to the next stock. Because as you can see, what do we got? About 10 or 12, 6 or 7, 3 or 4, 3 or 4, 8 to 10. Every single week, there's a whole bunch of different stocks. Now, this is just one list. I got like 6 lists that I look at. Each one has a different set of criteria because each one has something different that I'm looking for. But they're all coming up to basically the same. Tells me when is the stock paying its dividend. Based on that, I have an idea of what the stock is going to do next, because usually they go up in value. When they go up in value, just before the EX dividend date, that's when I want to jump in, because that little tidbit of information helps me decide what stocks I want to look at this week. Remember, there's over 10,354 different companies. Well, I'm not going to look at all 10,000 because they all don't match what I'm looking for. Consistency of profitability, weekly options. That's what I'm looking for. All right, so let's get out of this. Next, okay, remember, step 1, come up with a list. Step 2, put it in the calendar. Step 3 is look at the 1-year chart. Because the 1-year chart is going to tell me whether or not it's a good idea for me to continue looking at this or to say, next. Because we're all even on some points. Okay, we all get, 2 hands, 2 feet, 2 eyes, 2 noses, that kind of scenario. But where we different is how we spend our time. Now, I want to spend my time doing what I want. What I want to do is I want to watch the grass grow. I want to get my money in line. I want to go outside, have a nice cocktail, just relax, chill, maybe sit in the pool, maybe watch the birds, watch the squirrels. I don't know. I don't care. Simple, easy life. That's where I'm at my point, in this point in my life. 61, I'm already retired. Okay? So the money that I have has to last me for the rest of my life, which means if I make a mistake and lose money, well, I might have to go back to work. And after working for 5 decades, I prefer not to have to. Mark, good evening. Tommy, good evening. The source code. The source code is here. So I'm looking for 5 things. Remember, step 1, come up with a list. Step 2, put it into the calendar. Step 3, look at the 1-year chart. The 1-year chart is going to be yes, no, and it takes 3 to 4 seconds. Now I'm looking for 5 bits of information. Doesn't take long. 3 to 4 seconds should all it take. Okay? High, low, where was it? Where is it? What's the direction? It's not that difficult. Remember, this strategy, everything I'm going to teach you tonight was created for a 9-year-old little girl. Okay? 2008, she said, Daddy, what are you doing? Can you teach me? 9-year-old little girl wanted to learn how to trade stocks in the stock market. Most adults don't get it. Most adults don't do it. Most adults are afraid of it. So how is it a 9-year-old little girl could figure it out? An average 5% per month. That's what her average was, 5% per month. It's like, oh, good for you. So at a certain point, I said, you know what? I'm just not doing what I'm doing. I'm going to do this one. So I created for her. Now it's my 95% of all my trades are the trading strategy I'm about to show you. Every once in a while, I'll color outside the lines because you know what? Conformity is really not that much fun. Anyway, that's what I'm looking for. High, low, where was it? Where is it? What's the direction? Once I figure what the direction is, number 1, it's not at the high. Okay, I never buy anything at the high. It just doesn't make any sense. It's not at the dead bottom and it's not falling. It's actually going up at the moment, which is a good thing. Which now I go on and go to step number 4. Step number 4, remember I said rule 5? Make sure all the numbers work. Well, here's our first taste of the numbers. You ready? The big number on the board, 23.53, 23.53, 23.53, 23.53. Well, that's the last trade today. That's what the stock is at this moment, 23.53. So if I'm going to trade this, I'm going to buy it at 23.53. Well, now I have to decide what am I going to sell it for. Most people buy a stock and wait for it to move. No, that's not what I do. I'm buying it at 23.53. I'm going to pick a strike price right here, and then I'm going to sell it 2 seconds after I buy it. I'm going to buy it, and then I'm going to turn around and sell it for almost the exact same price I paid for it. Now, you're probably thinking, why? What is he doing? Pay attention. Everything's going to come together. You ready? It's called a covered call. One of the simplest, safest, most predictable trading strategy there is, and it is so safe, they say you can do it in a government-sponsored IRA. Actually, you can. There's certain trades you cannot do in your retirement account. A covered call, you can. It's safe. It is very safe. So, if I'm buying it $23.53, guess what? I'm selling it for $23.53. Now, you're thinking it probably, well, why? Where's your profit? Let me explain. Here it comes. You ready? So, if I'm buying $23.53, I sell it for $23.50, I'm losing 3 cents right off the bat, right? Okay, simple math. Okay, it's nothing difficult. But for this, for selling it for the same price I paid for it, I'm collecting this thingy right here. This is called a premium. Now, you may or may not know, but all stock options are insurance policies. Not life insurance policies, but insurance policies. An insurance policy insures a certain outcome. Well, the outcome here that I'm paying for or someone else is paying for is the right to buy it from me at a certain price by a certain date. And this number right here, all these numbers here, they're all called premiums. Now, if you have a house, well, you have a premium on your homeowner's insurance. If you have a car, you have a premium on your auto insurance. If you have health insurance, you pay a premium for your insurance. This is the same thing. If I'm buying it here, I'm selling it here, someone is going to pay this premium. I'm going to sell that contract, that insurance contract, to someone else. I'm going to collect this, 56 cents. So if I'm losing 3 cents, remember, 23.53, I sell it for 23.50, I lose 3 cents, but I'm picking up 56. Okay, that means I'm walking away with 53 cents. Now, I know you're probably thinking, it's only 53 cents. It's 53 cents per share. So if I get 1,000 shares, that's 5,300 bucks. Wait a minute. No, that's 530 bucks. 53 cents a share. Now, 53 cents a share on a $23.50 stock, that's over 2% for 1 week. Now, if 1% a week is 50% per year, 2% a week is going to be 100% per year. Now, I don't tell people I make 100% return every year because they look at me crazy. I mean, I get some weird ass looks when I say I make over 50% every year. Everybody says, no, you can't do that. Nobody does it. Well, yeah, they do. Okay, we kind of keep it quiet. But here's the thing. I'm creating a video diary, a video, documentary for my children and my grandchildren. Because when I'm gone, they want to inherit what they're going to inherit. And they ain't going to get anything until they can prove to the executor of my estate that they get nothing until they prove that they can handle money, which means investing it properly. Anyway, what else we got? Currently doing this with ULTY. Oh my God, see Sosa? Okay, Sosa just stepped up. Whether or not he agreed to it or not, he just stepped up to be the first turd of the day. Now, I don't mean that derogatory, but when I say never buy anything that's not consistently profitable, I like 2 decades. 2 decades is 20 years, 20 years. ULTY is not even 3 or 4 years old. Why the hell are you putting your money into a company? Now, don't get me wrong, you're probably doing it because you can see, hey, over the river, through the woods, maybe it's going to look nice in 5 or 10, 15 years. Nothing wrong with that, because you can't get to 10, 15, 20 years until you get past 1, 2, 3, 4, 5. Well, ULTY is at the 1, 2, 3, 4, 5 stage. I don't do those kind of stocks. As great as you think it is, take a look at the profitability. You get 2 choices. You can read the quarterly reports and the annual reports to see, did they make more money this year than they did last year? Did they make more money last year than they did the year before? Did they make more money that year than the year before, so on and so forth? And you will find out ULTY is not consistently profitable year after year after year. It's just not. The numbers just don't work. Okay, it's not on my list, and there's nothing wrong with it. I mean, someone's got to buy it, so you buy it. I have no desire to look at that thing. I look at it every week. Every week somebody wants me to look at it. I look at it and I always scratch my head saying, what the hell are you thinking putting your money into a company that's not consistently profitable? Fine, you do what you want. You like Philip Morris? Of course I do. How does it work at tax time? Brandon, at tax time, if you like paying taxes, you be my guest. Okay? Don't get me started on taxes. It's not a topic that the powers that be like me to talk about. It just is, you know, because if you take a look into that big, huge book, there's a phrase in there that not many people know, and if you tell it to an IRS agent, they will deny it head to toe. It is basically this: every dollar you give to the IRS is to be considered as a gift. Look it up. It's in that book, 2,500 pages. It's in there. It's buried so deep you cannot find it. But there is someone who actually goes through that book and finds these little gems. Okay? The definitions that they use aren't what the definitions that you and I think of. Because income to the IRS is not what we consider as income. Okay? Their taxable audience is not what we think it is. So I don't do taxes because, number one, they're voluntary. Number two, it's unconstitutional. The Supreme Court said a long time ago, taxes are unconstitutional, but guess what? The IRS doesn't give a care. They don't give a shit what you think. They're going to tax you anyway. They're going to take the money from you because you've been trained. You've been trained to give them the money. Anyway, don't get me started on that. We're going to look at Dow also. I've been doing stock for 6 years. I just started options. Life changing. You explain it very well. Chantel, oh, how are you today? You made 4,000 on Friday. Awesome. Good for you. Eagle 18, what exactly do you look for to determine if they are consistently profitable? Eagle 18, hold on a second. Lance, ULTY could be glorious, but most likely a divi trap. Hey, I'm going to agree with you. Steve says, whatever. Volatility is ridiculous when calculating premium. I'm terribly sorry. Volatility built into the premium makes it a sucker's game. I love people like you. Really do. Trade all the time. You have 2 lives. No, all the time. Does that say? No, trade all things. Okay, trade all things. I have 9. I'm live streaming on 9 different platforms. Okay, you may think there's 2. No, there's 9. Okay, so 9 different platforms. So I have a whole bunch of screens in front of me trying to answer all the questions. So, OPP. You think it's all hoopy. Everybody's entitled to their own opinion. Everyone's entitled to be wrong. Okay? Nothing wrong with being wrong. Because by being wrong, you learn. And if you refuse to learn, then you're just ignorant. Nothing wrong with being ignorant, if that's what you want. But if it is true, if it is 1% every week, why would you mock it? Seriously. You've never been here before, because I would remember that name. I'm very good with names. People show up and I remember that. Okay? But hey, you can believe whatever you want to believe. You don't really need to be here. You know, if you're not going to contribute in a positive manner, actually, I prefer you to leave. Think about it. All right. So anyway, let's continue. I follow you on other social media too. Keep up the great work. Thank you, Miss Chantel. So the numbers work, chart's okay. Let's take a look at the 1-year chart a little bit deeper, because 1-year chart only tells us so much. It tells us the high, the low, and a rough idea of where it's going. How you interpret that, that's up to you. You want to call it the motion of the ocean, the trail through the woods, the flow of the river, whatever you want to call it, whatever analogy you want to use to understand it. But it's all basically the same. Down, down, up, down, up, down, up, down, up, down, up. It's in an upward trend at this moment in time. That's 1 year. It's not going to give us a really good idea, but where do we think it's going next? Well, for that, we want the 90-day chart, last 3 months, and then we want the 30-day chart to kind of zoom in, because I want weekly cash flow. That means weekly. I want to buy it on Monday and get rid of it by Friday. That's a perfect ideal for me. Now, it works great in some accounts, not in all of them, but that's the goal. So let's keep on going. Why are you on TikTok, brother? Retire already? What's wrong with retiring? I need something to do. The Chief. Do you teach classes or one-on-one trading? Absolutely. If you're interested, DM me your number. I will call you personally. It means I'm not going to pass your number off to someone else, have someone else call you on my team. I don't have a team. It's just me. This is a hobby. This is not a business. It's just a hobby. Okay? I've been doing it for over 30 years because I learned a long time ago that nobody is coming to my rescue. It's me. Okay? I have waited decades for someone to come and quiz me on all that crap I learned in high school. You got to learn this. You got to learn it. Why? Nobody's ever come to quiz me on anything. Seriously. So why do I have to learn it? I don't. What do I think about SPY? I'm going to stop this one right here, because Crunktoid wants me to take a look at SPY. Now, Crunktoid, don't get me wrong. Some people love SPY. I don't. And if you just hang out long enough, I'm going to show you why I don't like it. So let's just progress on what we're looking at. Number one, we're looking at Siri. Okay, high, low, we saw all that stuff. We saw all these numbers. Now I want to dive a little deeper into the chart, because the 1-year chart only shows me so much. I want to look at where does it look like it's going next week. So to figure that out, we need to look at the current flow, like what are buyers and sellers doing currently. So for that, I need my glasses. Okay, All right, a year ago, last year, a year ago, Siri was at a 30, all right, sorry. Siri's at an all-time high, the high of the year, last year, 32.94. Now she goes from 32.94, drops to the bottom on the second week of April. Right here, here's the bottom, top, the bottom. So she shoots up, pulls back, now she's going up again. Great, that's the last 90 days. Now let's go into the last 30 days so we get a good idea of where it's going next. 30 days would be the third, right there. Okay, this is the last 30 days. Okay, here's your high, here's your low, here's where it was, here's where it is. Down, up, down, up, down, up. Simple, right? It was created for a 9-year-old. Less than 10 minutes. The reason why it's called the 10-minute trader, because when my daughter was 9, simple, safe, predictable, consistent, easy, in less than 10 minutes. You can't expect a 9-year-old to sit there for hours, kind of go through all that information. And trust me, there's a lot of information. Simple, safe, easy, in, out, thank you, have a nice day, see you next week. Same thing. So, what is it telling me? It's going up. It's in an upward trend. Now the next big question is, do I like Siri? Am I willing to put my hard-earned money into it and hold it until it hits my target? Guess what? If I'm buying it at $23.50 and I'm selling it at $23.53, and I'm selling it at $23.50, it's already past my target. The stock doesn't have to do anything. It doesn't have to go up. It's just going to stay where it is. If it goes up, great. If it stays where it is, great. It can even come down a little bit. Still fine. Now, let's see what that equates to in an actual trade. So we're actually going to do a trade on this so you can see how it works one step at a time. And if you didn't know, if you're new, I was just about to say we're live broadcasting, but we're not. We're going to open that up and then hit the streaming button because we're not streaming at the moment. I do forget that once in a while. All right, streaming. All right, that's going to be streaming in a couple of seconds. All right, so this screen is live on YouTube. So if you feel the desire to go back and re-watch it, you can. Okay, at this moment in time, it is 9:20 on the 3rd of September, 2025. So at this moment, it is live. So if you're tuning in and I said yesterday's date, well, that's a recording. It's being recorded, and tomorrow it will be a recording. All right. It's that past, present tense, and like that. You know, the funny thing is, back in 8th grade, my English teacher, as I'm leaving the class, she pulls me aside and said, James, you really got to pay attention. English is very important when you get older. I said, Mrs. Fader, no disrespect, but when I get older, I'm going to have a secretary, so I won't have to worry about it. She didn't find it as funny as I did. Anyway, so $23.50. Let's see what it looks like. Let's get rid of this. First thing I want to do, get rid of that, is change this. Because this is all the different trading strategies. Okay? Now, I can teach you each and every one of those, but that's information overload. I teach one and I give away only one. Okay? Now, my paid morning group is a different story. We do different things, but for here tonight, I'm giving away one, and that's the covered call. Why? It's simple, it's safe, it's easy, it's predictable, and it's consistent. If you do it right, 1% a week, that's 50% per year. It's really all you need. 10 minutes a day. Funny thing about 10 minutes a day, most people, most adults spend more time and energy planning a weekend barbecue than they do their personal finances. Well, guess what? That weekend barbecue is not going to help you when you're retired, because we're the only species that got to pay to live here. And when you're retired and the money stops coming in from you working, it's got to come from somewhere. Do it yourself or give it to someone else, let them do it for you. One or the other. Okay? I can pretty much guarantee someone doing it for you doesn't have the same interest in your money that you do. So, anyway, the covered call right here. So let's do this and let's see what this trade looks like. Covered call, there we go. We said the 23.50, this one right here. Okay, just one contract. So you understand, this is where that math comes in. Sorry, dude. Okay? If one contract is going to equal $100, 4 contracts should equal $400. Terribly sorry, the math is tough. Okay, one contract, market. And here we go. Here's what it sounds like. I always tell people to read it out loud so you can hear what you're saying and hear what you're doing, because sometimes your fingers, you hit the wrong button. Now, I say that, most people say, yeah, I ain't going to do that. Trust me, you are at some point going to hit the wrong button. Whether you think it or not, you are going to hit the wrong button at some point. I did 4 times this year. Anyway, here we go. By one covered call of Series 100, that's the weekly, 12 September 25. Now, 12 September 25 is next Friday. Not this Friday, because there's only 2 days left in this week. Very rarely will you get a full 1% for just 2 days. But for 5 days, yeah, that's easy to 1%. That's why I do most of my trading on Mondays, because Monday to Friday, it's easy to get 1%. 12 September 25, that's next Friday. The strike price, 23.50. Now that means anything over 22.92, it says break even, 22.92. Anything over 22.92 is going to be a profit. Simple as that. Break even is 22.92. So the stock is currently at 23.53. Anything over 22.92 is going to be a profit. So why not? Now, what else? Remember I said simple, safe, predictable. I want to know what my profit's going to be before I even do the trade. Here it is right here. Maximum profit, 57.50. I know what I'm going to make before I even do it. Most people buy stocks and then they wait. And then they wait. And they wait for the stock to move. Well, here, I don't care if the stock moves. I care if the company's profitable, number one. And number two, do they have weekly options? Because I have 2 goals and only 2. Consistency of profitability and preservation of my capital. Which means I really, 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 really try hard not to lose. Okay, I've done over 1,500 trades this year. I lost on 4 of them. I have 4 losses this year out of 1,500. I think that's pretty damn good. Anyway, 57.50 is profit. 2,200 is my investment. Cost of the trade, including commissions and fees. Let's call this my investment. Let's call this a weekly cash producing asset. I put in $2,200, $2,300, and this week I'm getting 57. Next week I might get 55. I might get 50. Week after that I might get 48. The week after that I might get 62. Week after that I might get 73. Week after that I might get 12. Every single week there's an opportunity for me, as long as I own 100 shares, 1 contract, that allows me to get weekly cash flow, week after week after week after week after week. There's 52 weeks in a year, and guess what? They ain't stopping. They're not stopping. Friday's coming, whether you like it or not. And guess what? When Friday's here, guess what? Next Friday's coming. After that, guess what? Next Friday's coming. You can't stop it. Tick tock, keeps on running. So if they're coming, I might as well profit off of each and every single one. All right. To find out my rate of return, I'm going to need the calculator. And calculator, okay, my profit, 57.50. To find out my rate of return, I take the profit, 57.50. I divide it by cost of trade, including commissions and fees, 22.93. Gives me my profit for 1 week. 22.93 gives me a grand total of 2.5% for 1 week. Well, think about that. If 1% a week is 50% per year, 2.5% per week is well over 110% per year. Well, that's doubling your money every year. Terribly sorry if you actually have to do 5 or 10 minutes of work every single week in order to get it. But here's the thing. Whatever your account is, 20,000, 50,000, 100,000, 200,000, 500,000, a million, whatever it is, 1% is what your time is worth per hour. Because if you're doing 10, 15 minutes every single day, well, in 5 days, that's about an hour. 1 week, that's about an hour. So a $100,000 account, my time is now worth $1,000 an hour. If I have a $20,000 account, my time is worth $200 an hour based on this. So if I spend 10 to 15 minutes every morning and I have a $100,000 account, hold it, honey, keep the kids quiet, get the dog out of my way, I'm working $1,000 an hour, give me some space. However you want to do it. So let's actually take a look at that again. If I'm buying it $23.53, I'm selling it $23.50, I'm collecting this, and this just so happens to be 2.5% return for 1 week. My goal is 1%. If I can get 2, good for me. Next, let's look next. Now we said we're going to look at another one, Dow. Okay, One Love wants to take a look at Dow. Let's get rid of this. Now it's always the same over and over and over again. KJ. So to clarify, every week you're selling options on the entire portfolio of stocks. Absolutely. Every single position I have, every single one. There's not a single exception in any one of my accounts. Okay, I share 3 of my accounts publicly, so you can see exactly what it is I'm doing. Okay, and the reason why I'm doing that is I'm creating a hedge fund and I'm creating a trading, and I need 2 years of complete verifiable information data. So I have almost 2 full years of trading, profits and losses for 2 full years, because the hedge fund, they're going to want to see some kind of historical performance that can be verified. So every single trade I do I do it live and it's recorded and it's available online. You can actually go and watch every single trade I've done for the last 2 years. Anyway, let's keep on going. Next on the list, Dow. I actually have some Dow. Oh, do I? No. I have IBM. Dow, D-O-W. Now, whoops. Try that one more time, D-O-W. First thing, high, low. Where was it? Where is it? Look at the motion. Down, up, down, sideways, down, up, down. I'm going to say no to this right now. Not even going to bother looking at it. Do you see that right there? Top, there's the bottom here. She shoots up. Now she's pulling back. It's not at this time. It's not even worth looking at. Now 2 weeks from today, yeah, it will be, because you zoom into this, get a closer look. Okay, here's the bottom. Here's the top. Shoots up. Profit taken. Now it's coming down. It's going to keep coming down until it finds a bottom, turns around, goes back up again. That will be about another week or so. So I'm going to write Dow down for next week, and we'll take a look at it. Because maybe next week, she'll find the bottom, turn around, go back up again. That's what I want to look for. So Dow, not this week. Sorry. So what else do we have over here? Oh! Crunkold. Is that right? Crunktoid. Crunktoid wants to take a look at SPY. Now, I told you I don't like SPY. Now, let me explain to you why I don't like it. I'm going to open up the questions over here. Sorry, guys. I didn't open up the questions. Okay. All right. There we go. I'm going to show you why I don't like SPY. A lot of people say SPY is great. I got a hard time with that great, wonderful crap. Okay. Now, before I go any further, I want to take a look at the historical data. It says $643 a share. Well, that's a little uncomfortable for most average people. Now, I want to take a look at historical data. So let's take a look. Because historical data, what's there? You get all the dates, get the high, the low, the open, the close, the volume, how many shares traded, what was the average, and also what it has is the dividend payments. Now, for those of you who don't know what a dividend is, Kane, woo, thank you, Kane. For those who don't know what a dividend is a portion of the company's profits that they give back to the investors. And that's us. We are the investors. We buy, we sell, we're looking to make money. So historical prices, and here's the dates. Let's change it up a little bit because I just want to look at the dividends. Okay? Dividends right there. That's all I want to look at. Now, I could take a look at 20 years of quarterly reports and annual reports. No desire. So let's take a look at 20 years of dividends, because here's how a dividend works. If the company is profitable consistently, the dividend will increase consistently. If the profits go down, the dividends go down. It's actually that simple, because dividends go up, profits go up. Profits go up, dividends go up. Same thing. All right. 20 years ago, 2005. Now, who was it? I think it was Crunkle or some weird name. Sorry. Here we go. You ready? This is why I don't like SPY. Follow along. 2005. March 18th, 2005. Very first dividend of the year, 46. All right, you ready? 46, 48, 52, 67, 51. Hold on a second. 67 to 51, that's backwards. That's not increasing in profits. Profits went down, dividend went down. Why the hell am I buying if hold on, let's give it a little bit of space. 51, hold on, let's move this. Okay, here's 51 right there. 55, 57, 79, 50, 79, 55. That's backwards again, twice. Okay, we're looking for 20 years. Twice so far it went down, backwards. 55, 65, 71, 77, 64, backwards. 66, 69. 71, 56, backwards, 51, backwards, 50, backwards, 48. Yeah, come on, seriously, that's like 8 times. And we're only on 2009. Hold on. It actually gets worse. Really does. So we're going to switch now from historical data to current summary. Now, the current summary is going to give us the actual numbers for this past year. Summary. Give it a minute. Come on, come on. Look at that Vanna White thing. All right, so let's take a look at the summary for SPY. Okay, SPY. All right, now for those of you who know how to read the summary, let's take a look. PE ratio, the NAV, volume, yield. Do you know what the yield is? Do you know what that means? You put money in, how much you get in return. It's the yield. Do you see the number? 1.13. 1.13. Not for the week, not for the month, not for the quarter, for the whole year. Okay, inflation is a hell of a lot higher than that. So by putting your money into SPY, 1.13, you're actually losing money every single year. Inflation is way higher than 1%. That's why I don't like SPY. The numbers don't lie. Year-to-date total return, 9.9. We're in week number 35. If I'm getting 1% every week, I'm already past 35%. This thing last year, 1.1, yeah, no. Sorry, I just don't like it. The number's actually horrible. But what the hell do I know? Anyway, let's keep on going. What we buying and selling tomorrow? Nope, 117, how are you today? Firewhy. Okay, swing trade or day trade? I don't day trade. Dave wants to take a look at Macy's. Oh, wow. Okay. Do you regret not investing in tech instead of low performance dividend stocks? Veggie burrito. That's an interesting question. Not at all. Okay, I'm past the point of shooting for the moon. You know, some people will get behind the bat and swing for the fences. Not me. Give me a bunt, give me a single, I'm good. All right, Gruntoid, SPY, I just looked at it. 1.13. What the hell are you thinking, brother? Next, the VIX. No, I don't do the VIX either. Red Bell. Jester, there's an echo on YouTube. Damn it. YouTube audio. Default audio. Hopefully that works. Okay. Currently doing this with ULTY. Oh, damn it. Let's take a look at ULTY. ULTY. All right, let's give it a second. ULTY is going to pop up any minute. Now, I want to take a look at historical data because that's going to tell us what do the dividends look like. How consistently profitable is ULTY? All right, so there it is. Yield Max, Ultra Option Strategy ETF, ULTY. I want to look at all the dividends. Now, let's take a gander. Okay. Do you see this number here? March 14th, 2024. March 14th, 2024. That's the first dividend they paid out. This thing's not even 2 years old yet. Why the hell are we looking at it? Seriously. March 2024. We're what? 18 months old? That's like throwing your keys to a 3-year-old. Hey, here's the keys to my brand new Lamborghini. Take it for a ride. Yeah, I know you're only 3. Go ahead, take it. Yeah, come on, seriously. However, let's take a look at the numbers for ULTY. 106, 141. Well, that's a nice jump. 106 to 141. 127, down. 113, down. 99, down. 73, 78, down. Down, 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 down. What the hell are you talking about? Why are you putting your money into something that's consistently losing? Boggles my mind. Yet, every single night, somebody says, there's a whole bunch of stocks that I like this one, and they consistently lose money. So, that's why rule number 3 really boggles my mind. I only invest in companies that are consistently profitable. Yeah, they might be boring, and they are boring. They don't do very much. They go up, and they go down, up, down. Mostly just kind of go sideways. Well, you know what? I want consistency. I want predictability, and I want simplicity. I love the Lee family. Simply, safely, predictability, profitably. I love all the Lees. Anyway, what do we have next? Okay, what is this stock? That is ULTY. Make me gag, but it is what it is. Raymond, what's going on? It's pronounced Bria. Bria, how are you today? Market makers have the edge. OPP, absolutely 100% correct. I believe you 100%. Lance. ULTY could be glorious, but most likely a divvy trap. I'm going to agree with you that one too. Alex, when should I sell my $9 AEO call? Now, Alex, I don't buy options. 80% of all options expire worthless. So I don't buy them. I sell them. Imagine this. If you sell something and then all of a sudden it becomes worthless 80% of the time. Well, in the stock market, you can do things backwards because normal people, we buy something, we turn around and sell it for a profit. Well, in the stock market, we can sell something, we can buy it back for less money and come up with a profit. So if I'm selling options on Monday and on Friday or Saturday they become worthless, well, I just made a profit. But it's the equation is backwards. But the equation still completes. You have to have a complete equation. You buy something, you sell something, you have a profit or a loss. Well, stock market, you can sell something, buy something, and you have a profit or a loss. Either way, A, B, C, C, B, A. It's always the same equation. You buy something, you sell something, you have a profit or a loss. Stock market, I can sell something, buy it for less, have a profit. Okay, so Alex, I can't tell you very much about AEO. I do have some of it, so let's take a gander at it. AEO, American Eagle Outfitters. What is that blondie up to this week? Well, let's check it out. You ready? Glasses. It's always the same thing. 1 year chart, always the same. High, low, where was it? Where is it? What's the direction? Up, down, sideways, up. It's really not that difficult. What did it take me? 3 seconds? High, low, where was it? Where is it? Direction? Yeah, about 3 seconds. After that, I'm going to the numbers. 1362. Okay, 1362, closest is going to be the 14s. Okay, there's no 14. Do you know why there's no 14? Let me explain. The last trade today, 1362. See, right there. See this number right here? After hours trading, 16.98. That's the current price, 16.98. So these numbers are useless at this moment in time. But it's true, okay? Last trade, 16.92. Now, sorry, 13.62. Now it's at 16.98. So if I was going to buy at 16.98, I'd be selling at 17. 17 is going for 20. That's over 1%. That's what I'm looking for. Do the numbers work? Okay, so tomorrow morning at 9:30, all these numbers will reset, so it's closer. Now, after hours trading, it kind of throws us off once in a while when this changes, because then this changes, and then we can't really get them up with some good numbers. But you asked me, when do I sell my AEO? I can't tell you when to sell it. I can't tell you anything. Matter of fact, even if I told you, you shouldn't listen to me anyway. Okay, I'm just some random guy on YouTube. There are a few people that have left their numbers and I've actually talked to personally. There's a whole bunch of you here, because there's a lot. Leave your number, I'll call you personally. Other than that, none of you really know me. So you have to decide, does it make sense? Is what I'm saying true, or is it not true? If I buy it for this price, sell this price, collect this, in 1 week, I collect 1%. 1% every week is over 50% per year. Does that make sense? It either does or it doesn't. All right, so we can't do this one because after hours market has a tendency to mess things up. Is what it is. Lauren, Gemini has an IPO. I don't do IPOs. Okay, Lauren, I said 2 decades of profitability, which means the company has to be at least 20 years old, bare minimum. OPP, wow, insult me. Hey, you say stupid shit, you're going to get stupid results. Okay, you say something to provoke a response. I give you a response, you don't like it, well, find us something else to say. If you have nothing positive to contribute, don't say anything. It's that easy. Nothing good to say, don't say anything at all. You want to be insulting? Fine, I'll insult you back. Okay? You're definitely not a Gen Xer, because we Gen Xers, we really don't care. Anyway, next. What else do we got? All right. Can you share what software you're using? Oregon Patrick. This is not software. This is a trading platform. So if and when you do want to buy and sell stocks, you have to go to a trading platform or some kind of a broker. This one is owned by Charles Schwab. It's called Think or Swim. Okay, you can download it for free and use it for free for a while. But eventually, Charles Schwab is going to say, hey, you've been using our stuff for a while. Why don't you come throw me a bone, open up an account with us? That's what they're going to say. They'll let you use it for a while. You are not reading the TikTok comments. Dave92, terribly sorry. I addressed this situation before we even started. I'm streaming on 9 different platforms. That means, brother, you're not the only person on the dance floor. Okay? So as colorful and flamboyant as you may be, I'm not really paying attention to what you specifically are saying because there's a whole bunch of other people here before you. Sorry. I try to answer as much as I possibly can. I can't answer everything. I try the best that I can possibly do. Come up with a good question. I'll give you an answer if I see it. Okay, Jan Mark Ryan Ramirez. Would you please look at Gap? Yeah, I actually own some Gap, so let's take a look at it. Same thing, always the same, over and over again. High, low, where was it? Where is it? Look at this. Up, down, up. It's going in an upward trend at this moment. What's it at? 22.59. The 22.50 is going for 57 cents. That's more than 2%. Okay. Do I like Gap? Only way to find out, let's take a deep dive into the chart itself. A year ago, 22.55. Look at that. A year ago, 22.55. Right now, 22.59. You held on to it for a whole year. What did you get? 4 cents? 22.55, 22.59. Yeah, that was a great investment, wasn't it? Anyway, low of the year, second week of April, 1707. The high of the year, May 22nd. Then she drops right here. Look at the last 30 days. Because the last 30 days gives us a good indication of where it's going next. Yeah, no thank you. I don't buy at the high. Okay, here's your bottom here. Okay, from 19 to 23. Yeah, I know it's only $4. But $4 on a $19 stock is over 25%. That, my friends, is a 25% increase. Do the math yourself. 19 to 23. It's a $4 move. $4 move on a $19 stock is 24, 25, 26%. No, thank you. I'll wait for it to drop, come back down, and then I'll jump in. Okay, that's all stocks do. They go up, they go down, they go up, they go down. When it comes down, I'll write Gap down for 2 weeks from today and take a look at it then. Okay. Next, you're not reading TikTok. Yes, I am. Hey, man, what's going on? Pablo, what's happening? Fiat at $3 per share, 280% return monthly. Is that even possible? Pablo, I'm not going to negate what you're saying because I'm not 100% sure what you're talking about. Fiat at $3 per share, 280% return monthly. Is that even possible? I'm going to say no, only because when you say monthly, that implies that it's more than 1 month. So look at it this way. $3, 280% of $3 is somewhere around $9. So it goes from $3 to $9, from $9 to $27, from $27 to 91. Okay, and 280%. No, it's not possible. Okay. Christina, Gen X, woohoo! Let's keep on keeping on. The app I'm using, Webull, should I invest in it or not? Pablo, I honestly don't know anything about Webull. Okay? I couldn't tell you whether or not to invest in it. Number one, I know nothing at all about you. The lawn sprinkler guy, I'm echoing. I'll have to take a look at it. Now, I do have, as my son likes to call, some professional nerds coming in, and they're supposed to revamp everything and get it a more professional setup. Okay, fine. So after he does that, maybe everything will be a little bit better. Okay. Annette Molina, is each covered call $100 worth of stocks? Yes, absolutely. So you have to have 100 shares to do one contract, 500 shares to do 5 contracts. Same thing. Nikki, how are you? CJ the FP, good evening, CJ. Franklin, good evening. Richard Bruner. Good evening there, young sir. How's your wife and that nice Porsche you just bought? You look broke. Why should I listen? Alex, you don't listen. Don't listen at all. I look broke. Thank you very much. I don't know if I take that for a compliment or not. Why does it have to be 100? Sorry, I'm new. Ali, great question. I don't make the rules. The rules for stock options were created in the 1970s. That's when they first came out with stock options in the 1970s. So they've been here for a while. So I can't tell you why they come up with their rules. All I can tell you is what the rules are. Okay? Richie Rich, what stock is that? Gap, GAP. Annette, thank you. Joe Drake, the lawn sprinkler guy. How quickly is your average sale of a covered call? Less than 6 seconds. Okay? I buy, I sell almost at the exact same time. Mark Cosino. Good evening, Mark. Jose Cardosa. Back again. I remember that name. Let's keep on going. Uh-oh. Asif wants to take a look at TPR. Doesn't sound familiar at all. TPR. Tapestry, is that right? It is. Okay, here's Tapestry. Take a look. High, low, where was it? Where is it? Look at the momentum. Up, down, up, down, up. Okay, what does that mean? Don't know. 104.43. Oh, the 105s are going for 215. That is over 2%. So let's take a closer look at Tapestry. Now, I'm not going to get into whether or not Tapestry has dividends or not because I don't know. It's not one of the stocks that I look at. Okay, so a year ago, we're at the bottom, 40.24. Did you hear that? 40.24. 100% increase. 150% increase. That's a 150% increase from where it was to where it is. Got your profit taken here. Now it's retracing. Well, let's take a closer look at that retracement. Here's your high right there. Okay. Here's your high. Here's your low. Now she's going back up again. Do you like Tapestry? Is this a company you want to buy and hold on to? Well, that's a decision only you can make. I have no idea who they are. I mean, I've heard of them, but I've never invested in them. Okay, so the 104, the 105s. Let's get rid of this. Covered stock, the 105 right there. One contract. There we go, there we go. Confirm and send. Buy one covered call, TPR 100s, the weeklies, 12 September. It's next Friday. The 105 call options. 284 is the profit. 10,000 is the investment. 10,000. Okay, calculator. Clear that. 284 is my profit divided by the investment. 10,216 comes to a grand total of 2.77% for 1 week. 2.77 for 1 week. That's well over 100% for the end of the year. That being said, you got to ask that question. Sorry, it's the same questions over and over and over again. It's boring as hell. That's what I tell people. It's not for everyone. It's boring. It's repetitive. It's monotonous. It goes nowhere quickly. But guess what? It's profitable. It's simple. It's easy. It's consistent. 1% a week. I'm okay with boring. I kind of am. You know, I'm 61. I've seen a lot in my days. Okay? So I'm okay with 2.7% for 1 week. Jump in, jump out, next. 10,354 different companies. It's easy to find one coming up next. So what is next? Who are we looking at next? Ooh, FLMI. Okay, Weekend Warrior, Open Door Technology. Dude, you got to give me the ticker symbol. Oh, is it OPEN? All right, let's check that out. I have no idea who they are. No idea what they do. Okay? If they've been around for over 20 years, I would know. I'd like to think I would know. OPEN. I'm going to say hell no. Now, the reason why I'm saying hell no is look at this. A couple of months ago, it's at 48 cents. Think about it. If it was 48 cents a couple of months ago, how can this possibly have 20 years, 2 decades of increased profits at 48 cents a couple of months ago? Yeah, no. Sorry, no, no, no. Shumana, Chantel, good evening. Ariana, Chris Boom, what's your thoughts on railroads? Odd Jobs Kev, you got to give me a ticker symbol, dude. That means nothing to me. Beto, what is the other option for SPY? I have no idea what you mean by the other option for SPY. Okay, now just stocks alone, you have ETFs, you have mutual funds, you got futures, you got cryptocurrency, you got Forex, you have thousands upon thousands of choices to make. So when you say, what is the other option for SPY, you got to be a little bit more specific. Okay, Silent Samurai wants to take a look at UNH. All right, let's take a look at UNH. UNH. I like to call it University of New Hampshire. No, not really. Okay, high, 640. Low, 240. Sideways, down, up, sideways. 307.88, 307.88, 307 right there, 650. Oh yeah, that's more than 2%. If you like UNH. Doesn't look like it's going anywhere. Here's the top, here's the bottom, down, up, sideways. All right. All right, I'm here to learn. LA Cali, how are you today? Lance, do you trade futures? Any prop firms? No, I don't do prop firms. I don't do futures. I used to years ago. Way above your head. Stick to your bucket shop tactics. Thank you. You got your camera right, Grandpa. Thank you. There it is. A grift. Thank you kindly. Don't take advice from an unregistered failure. Thank you. I love negative people. Do you know why I love negative people, OPP? Because if you don't have enough turds in your life, which basically you are, I can see, then I'm not working hard enough. So you're number one turd for the day. Thank you. Ricardo, did you manage to 203 a crash? If you're holding stocks to crash, I understand never sell at a loss, but your capital is held up for a limited to options on those stocks, lower premiums. Thank you, Ricardo. Here's an interesting thing. Okay, interesting. Talking about that subject. Back in the late 70s, okay, just before the 1980s, there's what was called the gold rush. Gold was selling at $250 an ounce. $250 an ounce. And then the gold rush, it went from $250 up to $800 an ounce. Now, those people who bought at the top, because it looks beautiful, okay, they had to wait 3 decades, 30 years just to break even. So, you have to take it for what it is. Either you like it, you want to hold on to it, you agree with it, or what are the other options? What are the other alternatives? What's my thoughts on Ford? Ron till Ford. Okay, hold on a second. Ron till Ford. Let's take a look at Ford. Okay, interesting. Here's your bottom, here's your top, down, up. Right here, she's pulling back right there. Not quite the time to get into Ford, but if I want to keep my eye on it, here's your bottom, shoots up from $10.70, she goes up to $12. 10, so it's almost $2. Well, $2 on a $10 stock is 20%. That right there is a 20% move. Now it's coming back down again. So Ford may look good in another week or two. So let's write Ford down for 2 weeks from today. From today, there we go. There you go, pumpkin. Now, don't get me wrong. Ford is one of those stocks. They've been around for over 100 years. Granted, they don't have the greatest historical performance in their options, but it's a very few stocks that are actually selling for less than their book value. If you understand what the book value is, well, that's if the Supreme Court says you got to divest, you got to pay off all your investors, pay all your bills, liquidate. Well, liquidation value is basically the book value. It's kind of like having a garage sale. Sell everything for what you can. What you have left is called the book value. You pay off all your vendors, you pay off everyone you own, and then you take a look at what you have left. That's what is the book value. The book value for Ford is less than the stock, well, actually it's higher than the stock price. Okay, TPR. Hold on, Asif, TPR. Didn't we just do TPR? TPR? Yeah, we already did TPR, dude. UWMC. What the hell is that? UWMC. UW Holdings. Okay. I find it very challenging to think this thing has 20 years of profits, but okay. Here's your top. Here's your bottom. Down, sideways, up, down. It's in a downward turn, so no. Wait a little bit. When it finds the bottom after the pullback, then jump in. Here, zoom in a little closer. See? Your high, your bottom, shoots up, down, sideways. Not quite the perfect opportunity, but if you like it, just keep your eye on it. Phil, dude, you look like a broken record. Thank you, Phil. Very nice of you. If this con man suckers one person a day, he's making money. Why is there always one turd in my life? Okay. There we go. All right, Orlando. Many need to hear the same thing 59 times before they get it. That actually makes sense. Now, for my 9-year-old daughter, she grasped it in 15 minutes. There's a couple of students that I have that grasp it really quick. There's only one person I've ever seen grasp it quicker than my 9-year-old did. It's a girl from the, wait a minute, she's from Vietnam. Yeah. All right, anyway, so let's keep on moving along. Cindy Richards, good evening. Anthony, what's going on? Darth Vader's in the house. Ricky's here. Dave wants to take a look at Macy's. Macy's, here we go. Oh, I'm going to say no right away, but here's the thing. Dave, check this out. Okay? You do whatever you want with this information, okay? Down, up, down. Look at this. Shoots up. Look at the volume. Okay, here's your average volume, and this thing shot up 5 times the amount of volume. And she shoots way up. This is called a gap up, a black swan event. When it moves that much, that's called a black swan event. And what's usually going to happen? Usually going to come back down again. Usually. Do what you want with that information. It's not a tip. It's not advice. It's an observation. Okay? When you have a gap up like that, your top, all that space. Steve, create fire variety. How are you? Trade 9. You swing trade 9? I have no idea what that means. You swing trade 9. Can you explain what that means? Swing trade or day trade? I don't even know how to answer that question. I buy on a Monday, I sell on a Friday. That's what I like to do. What we buying and selling tomorrow? Nothing. I've done all my buying this week on Tuesday. Hey, Bam at Mac, what's happening? Good evening. Can we look at BMY, Bristol Myers Squibb, BMY? Check it out. Here's the high, here's the low, here's where it was, here's where it is. Up, down, sideways, 47.50, 47.50, 79 cents a share. That's more than 1.5%. Well, let's take a closer look at it. Okay, a year ago, we're around 50. The high of the year, 63.51, that was in the middle of March. From there, we got a bottom right there, almost 30 days ago. Okay, high, low, where was it? Where is it? Look at this, up, down, up. Here's your bottom here, 1, 2, 3, 3 days to the upside. This is what I look for. Here's your top, comes down, here's the bottom, 1, 2, 3, third day right there. That's where I would be jumping in. Okay, 47.50, right there, 47.50. Let's actually do it. Run it through the ringer and see what the numbers look like. Let's do it. Let's get rid of this. Calculator. Oh, nope, we don't need the calculator yet. Covered call right there, 47.50 right there. One contract, just so you get an idea of what one is. And then you take a look. If one costs this much, can I do 3? Can I do 7? Can I do 72? We're all different. We all have a different number. Market, there we go. Confirm and send. Here's Johnny. Buy one, covered call, Bristol Myers Squibb, 100, that's the weeklies. 12 September, that's next Friday. 47.50 call option against the stock at the market to open, to open, to open, to open. I didn't repeat myself. I didn't stutter. To open, I'm doing 2 trades at once. One trade, I'm buying the stock. That gets sent to New York. The second trade is I'm selling an option. That gets sent to Chicago. 2 trades, to open, to open. I'm opening 2 trades. Difference about those 2 trades, one of them is called evergreen, which means I will own it until I decide to sell it. The second one, the option, that's a ticking time bomb. Basically, it means at some point it expires. And this one expires 12 September. 3:59 p.m. next Friday. You do something or you don't. It's that simple. You have the right, not the obligation, to do whatever you want within that time frame. From the time you pay for it till the time it expires, you can do whatever you want. If you're buying, if you're selling, you got to sit and wait. I don't mind. Time's going to come by anyway. So why can't I pick up a few dollars every single week? Do I like BMY? Well, Bristol Myers Squibb is a dividend king. That means 5 decades of consistent profitability. You either like it or you don't. Why wouldn't you like it? I have no idea. They're consistently profitable. Why wouldn't you? Okay, some more questions. What do we have next? All righty. Ronnie Bass, what's happening? Nikki, good evening. K-Van wants to take a look at Hewlett Packard, HPQ. HPQ. Looks like it's stalled. Let me explain. High, low, where was it? Where is it? Up, down, up, down, up. What's going on here? Let's take a closer look. Here's your bottom. Here's your top. 24 to 29 is $5. That's 20%. 24 to 29. That's a $5 move. On a $24 stock, that's 20%. Do you really think after a 20% increase in 30 days, it's going to keep going up? It could. Do you really want to hitch your wagon to that pony? I don't. I take profits at 2 or 3%. That thing's up 20%. All right. Do you still do Nucor? That's NU, right? NU. Okay. I'm going to say no. Didn't even take long to see it. Look at this right here. Bob's here. Shoots up. Yeah. No. Gonna wait. Skivo. Key. Okay, Key Bank, huh? K-E-Y. Ooh, what happened here, Kivo? It's up the top, pulling back. That's what happens. Stocks go up. They go up to a certain point. And here's your top. Here's your bottom. Shoots up. Profit taking. And it's going to keep coming down, probably somewhere around here before she turns around and goes back up again. It's not that difficult to read a chart. They're relatively simple. Daniel, Verizon, VZ. Now, VZ is going to be a no this week, but maybe next week. Okay, same thing. Here's your bottom, shoots up, profit taking now has come down. Well, what we're looking for here is a new bottom. When it finds the bottom, it's going to turn around and go back up again. Well, because that's what they normally do. Stocks do two things and only two things. They go up, they go down, they go up, they go down. That's it, that's all. You know, hope, pray, bitch, moan all you want. It's not going to come to your house and take the dog for a walk. Okay, a stock, Verizon, is not going to come to your house and cook you dinner, tuck you in bed, put little candies on your pillows. No, they go up, they go down. That's it. Uh-oh. Jay wants to take a look at AGNC. AGNC. That's going to be a no also. Look at that. $7 all the way to 10. From 7 to 10 is $3. That's what, 40%? Yeah, no. Sorry. Heather. Okay, I'm trying to make a quick G. What's going to jump tomorrow? Don't know. I don't play that game. Sorry, Heather. Risk Invest. How does one set up a covered call if you already own 1,000 shares of a stock? Oh, that's easy. Okay, get rid of this. Right there. Okay? If you already own a stock single, what do you own it at? You own it at $9.95. I'll go to the 10. There it is right there. All you do is just click on whatever strike price you want to sell. Click on that right there. And then you fill in however many contracts you have. If you have 1,000 shares, you got 10 contracts. You get 25,000 shares, that's 25 contracts. One contract for every 100 shares. It's simple. Okay? Single, because you're selling a single option, whatever the closest strike price that you want to sell it for. If you bought it for $25 and you want to sell it at 26, 27, that's the strike price you choose. And then you sell however many contracts directly related to how many shares you own. 1,000 shares, 10 contracts. User 6111811808635. Why couldn't your parents name you Peter? K-Van. If you're 61, technically you are a boomer. All right, pick on me, why don't you? Zen. Sell a 226 covered call for higher premium. Or what date is best? Now, Zen, when you're doing that, you got to take into consideration the time value. Okay, when you're going that far out, you're losing the opportunity to collect 1% every single week. So even if you took the closest 2026 option, which would be the third week in January, so you have all of September, October, November, December. That's 19 weeks. Okay? So the earliest 2026 option that's there, the earliest one is the third week in January. That's 3. You're going through the whole fourth quarter. That's 13 weeks. So 13 weeks and 3 weeks, that's 16 weeks. Well, how close are we to the third quarter? We're 3 weeks away. So now you're at 19 weeks. Are you going to get a 19% return? That's 1% every single week. Okay? Now, I've never done a covered call that far out and got 19%. But, hey, if it works for you, great. Nope. What are we buying and selling tomorrow? Don't know. Okay, we already looked at BMY. Eric, luxury handbags. You actually got to give me a ticker symbol, all right? Because luxury handbags doesn't mean anything to me. We Move New York. I have no idea what that means. Bachler, good evening. Chris, good evening. Wishmore, what do you trade? I trade weekly options on pre-qualified dividend stocks. Those are companies that are consistently profitable for at least 2 decades. The Chief, Shan, good evening. John Smith, enjoy other points of view. Boring is good. Keep making money. Open nice weekly. I know not your style. Okay, thank you, John. What about Pengu? Never even heard of it. Jeff Matisik, ZVRA. I have no idea what that is, but let's take a look. Because you know what? You put up something, I'll take a look at it. I'll give you my opinion. You may not like it, but I'll give you my opinion. ZVRA. Hell no. Reason I say hell no, I don't do monthly options. September, October, November, January. Now let's do some quick fancy math. Monthlies means once a month, 12 times a year. If I get 1% for each trade I do, that's 12 to 24%. If I do the exact same amount, 1 to 2% every trade, on a weekly basis, that's 50 to 100%. Terribly sorry, Jeff. 12 to 24 does not even come close to 50 to 100. I don't like monthlies. The numbers just don't work. And, Jeff, to make matters worse, Jeff, are you ready for this? Okay. This is 30 days. 30 days ago. Up, down, up, down. Now, tell me where you think it's going to be in 30 days. And guess what? If you're wrong, you have to hold it for another 30 days. And what is the 30 days they're offering today? It's at 9. Okay, the 9 is going for, oh, look at that. I hate that. It says 0. Can't figure out a 0. I don't like monthlies. It's hard to judge where it's going to be in 30 days, number one. Number two, if I'm wrong, I have no other choice but to hold it and get less. The numbers just don't work on monthlies. I don't like them. Mark, I've made 3.5% a month for the last 4 months when I started with James. Thank you, Mark. I'm going to take that as a compliment. Crackerjack 89, how are you today? Brendan, I bought a bag of Pengu at 4 cents and have been holding for over a month. I'm not 100% sure what you mean by that, but okay. Hey, Mark, what did you want to buy tomorrow? Evening, sir. Question, do you place a trade the same week dividends are paid or 2 weeks before? 2 weeks before. The reason why is most dividend stock have a tendency to go up in value just before the EX date. What time frame are you using on those charts? 1 day. How about Pfizer? Rob Luis wants to take a look at Pfizer. PFE. PFE. Papa Frank Echo. High, low. Where was it? Where is it? Up, down, sideways, down, up, down, up, down, up. 24.79. The 25s are going for 22. 25 is going for 22. I'm going to say no because 22 is not 1% of 25. No to Pfizer. The numbers just don't look good. Don't get me wrong. I like Pfizer. Just not this week because the numbers don't look good this week. Next week, they might look different. Wait a minute. Yeah. No. Nope. Sorry. Looking at the wrong one. Next, RKT. What the hell is RKT? Is that Rocket Labs? RKT. Rocket companies. Okay. Company makes rockets. All right. High, low. Where was it? Where is it? Down, up, down, up, down. 1788. The 18's going for 67. Hell yeah. However, I don't think they have dividends. Usually when a premium is that high. Hell yeah, baby. You like that one? if you like it. So let's take a close look at it. So stock goes up and down. Yep, Timmy, that's funny. All right, last 30 days. Okay, here's your last 30 days for Rocket Company. High, low. Where was it? Where is it? Look at this. Up, down, up, down, up, down, up. Okay, 1788, the 18s, 67 cents. If you like rocket companies. Simple, okay? Then you just go through the motions. What makes sense? Do I like this company? Do I want to buy it? Do I want to own it? What's my target? Well, at 1788, my target would be 18. That's only 22 cents off. Do I want to hold it until it hits 18 and then say bye-bye, thank you? All right. K-Van, you're 61. Technically, you're a boomer. You're officially off my Christmas card list, dude. Okay, I don't identify with the boomers. Okay? All my brothers and sisters, we all, okay, my mother was a boomer. Okay? She was a boomer. So was my dad. Yeah. Seller 26 already did that one. You make options. No, I sell options. Okay, C-wide spinner. TRGP. What the hell is that? TRGP. Targa. No. Okay, apparently you weren't listening. I don't do monthlies. The numbers just don't work. Mr. Dappa, thank you kindly. Okay.
Can you look at the Best Buy?
Best Buy. Yeah, let's take a look at Best Buy. BBY. Interesting. Take a look at Best Buy. The high of the low, where was it? Where is it? Look at this. Down, up, sideways, up. 74.89 to 75 is going 155. That's 2%. Let's take a closer look. Closer look. A year ago, 100. The high of the year, 103.70. The bottom of the year, second week in April, we call that TDS day, 54.90. That's almost a 50% drop if you're okay with that. And if you're not okay with that, you really shouldn't be playing this game because you can buy something and it can drop 50%. Are you going to panic and sell? Or are you going to say, I'm going to stick with rule number 1 and rule number 2? Well, rule number 1 is never buy something unless you plan on holding it through sickness and health, richer and poorer, till death do us part. Same thing. Never sell at a loss. Okay, so Best Buy, look at this. Here's your bottom, shoots up, pull back, bop, 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 bop. Okay, that's the last 3 months. This is what it's doing. So what do you think it's doing next? Let's look at the last 30 days. Okay, here's your bottom, here's your top. Shoots up, pulls back, here's the bottom here. 1, 2, 3, 3 days up. There's your entry point right there. If you like Best Buy. I like 3 days up after a top, pull back, here's the bottom, 1, 2, 3. If you like Best Buy, what am I looking for? Just 1%. If I'm buying it at 74.89, I want to sell the 75s, pick up 155, and hold on to it until it hits 75. Then I say, bye-bye, thank you for that little 1 or 2%. I don't get attached to anything. Longest I've ever held anything was Kohl's. And I held it for over a year. I think I held it for 14 months. Not because I liked the company, because I liked the profits that it gave me every single week. 1, 2, 3% every single week for a whole year. It went up, it went down, it went up, it went down, it went up, it went down. Staying within that range, giving me a nice profit every single week. Graham Master Dog, good evening. K-Van, thank you for that. Kurt Thompson, E-T-H-A. What the hell is that? E-T-H-A. Is that? Okay, that's what it is. All right, well, let's take a look. High, low, where was it? Where is it? Up, down, What's going on here? 33.87 to 34 is 146. Do they even have dividends? I don't know. That's something you should know before you jump into anything. Because dividend stocks have a tendency to be predictable and have a pattern, a repeatable pattern, over and over and over again. They go up, they go down, they go up, they go down. It's not a growth stock. A growth stock, well, they just have a tendency to go up, down, up, down, up, down, up, down. That's a growth stock. That's not what I'm looking for. I'm not looking to put my money something and then sit and watch it and wait for it to grow. No, I get bills that come due every single month. Tammy, MindMed, MNMD. Never heard of it. MNMD. I don't do monthlies, kiddo. Sorry. September, October, December, January. No. What was that?
Weeklies only.
Weeklies only, absolutely. Okay, what else do we have? ETH, we already did that one. RKT's Rocket Mortgage, yeah, Rocket Company's got that one. Dr. Dapo, how are you today? Just me, Nike. Ooh, I actually have some Nike. I do. Interesting. Big drop. Let's see what happens to it. Here's the top. Here's the bottom. Okay. Up, down, down, up, down, up, down. What's going on here? 74, 74. The 75 is 132. That's more than 1.5%. Why not? Let's take a look. A year ago, 81.96. Top, 90.45. Bottomed out, TDS, 52.19. Second week of April. Last 30 days, right there. Okay, so here's where we are. We dropped, shoot up, gap down, and we have a new bottom today. So I already own it. So, I'm not going to look at it as if I'm going to buy it. But you got a gap down here. Gaps have a tendency to fill. So as soon as this finds a bottom, she will turn around and go back up again. Eventually. That's what they do. Next. Ooh. Bodhamdulchara. Interesting name. Ooh, David wants to take a look at Disney. But do you have a secretary? I did have a secretary when I had a manufacturing company. But now that I'm retired, I don't have a secretary. Good question, though. CMG has icebergs at 43. Good to sell. Spin Shazan. Okay, let's take a look at CMG. Isn't that Chipotle? It is Chipotle. And it's down again. Well, let's take a look. A year ago, 55.93. Top out at 66.68. Okay, last 30 days. Okay, down, up, down. Oh, check this out. Bottom was yesterday. Today, one day up. Tomorrow would be the second day up, and maybe this might be a good one to jump in on Friday, if you're okay with that. Because bottom's here. Here's your top. Drops down to the new bottom. One day up. I like 2 days, and then on the third day, I'll jump in. If you like Chipotle. Now, Chipotle doesn't have dividends, and yeah, I bought it once or twice because the numbers were just ridiculous, and everything looked good. Okay. David wants to take a look at Disney. DIS. Interesting. Not glamorous, but interesting. The high, the low, up, down, up, 117, 117 is 198. Okay. Do I like Disney? Does it look good at this moment? Well, let's take a deeper dive. Deeper dive, 89.38, shoots up, pulls back the bottom right there. Second week of April, 79. Topped out a couple of weeks ago. The end of June, 124.66. Up, down, up, down, up, down. Okay, kind of know what's going on here. Okay, well, look at this. Here's the bottom here. Now she's shooting back up again. Okay, I'm looking for momentum. Which direction is it going? Here's your last 30 days. Not that difficult, is it? Remember, it was created for a 9-year-old. It's the adults that have a tendency to make things more complicated than they need to be. Ooh, Steve wants to take a look at Yum. Now, Steve, I'm not quite sure if you know this or not, but Yum used to be a dividend king. 5 decades of consistent profit increases. And then one day, they decreased their dividend. Now they're no longer a dividend king. They have to wait another 40 or 50 years to get back to that status. All right. Crazy here. SITC. What is that? Anybody know what SITC is? SITC. Oh, it's a no is what it is. I don't do monthlies. They just don't work. I don't know why. You keep asking me to look. Mr. DAP. ACI. What is ACI? ACI. Albertsons. Really? Albertsons? Really? High, low, down, up, down, sideways. 1935, the 1950s, 0, 1920. Yeah, no. The numbers just don't work for that one. Sorry. Dr. Dev, we already looked at Verizon a little while ago. Holy cow, I'm done with all those. Wow. Or what do we have here? But do you have, no, I don't. Do I trade futures? Do you use prop firms? No, I don't. I did some financial planning, and it looks like I can retire at 97 and live comfortably for 11 minutes. You know, I had that same issue. Okay, you got 11 minutes. I got 12. Got you beat. Anyway, David Fox, how are you today? Phil Collins, how much money does it take to survive? Now, Phil, that question, it's a good question, and everybody should ask that question. Kupner, thank you for that. How much does it take to retire comfortably? Well, we are all different. Now, we are the only species on this planet that's got to pay to live here. So how you want to live, okay? Like, do you want to get a tent and go out in the desert and rough it? Well, you don't need a lot to live that way. But if you want to live on a beach like in Maui, you're going to need a hefty chunk. Always going to depend on what it is you want. Work the equation backwards. If you want to live someplace that costs you $20,000 a month, well, you're going to need at least 500 grand, bare minimum. 500 grand is 5,000 a week. 5,000 a week is 20,000 a month. Okay, fine. But if you can live comfortably on, say, 4,000, you're only going to need 100 grand. 100 grand is 1,000 a week, which is 4,000 a month. It all depends on what it is, what level you want to live at. What's your comfort level? Mike Sweeney, when do you get paid the premium? Right when you sell the option? Absolutely. If I buy the stock first thing tomorrow morning, I sell the stock option 2 or 3 seconds after I buy the stock. I collect that premium in my account that very same day. So I find that great because I get a credit card, a debit card, and a checkbook attached to my trading account. The money that I'm not investing, I can move it into a money market fund and get 4%, or whatever they're paying at the moment. I don't really pay attention to that because I don't pay attention to the little pennies anymore. A little late to the live. You talking covered calls? Ross, good evening. Yes, we are. Ludwin. Hey, James. I finally got my Charles Schwab account. All right. Way to go. Dylan, nice to see you. You're welcome, Dev. Dev, only 4 losses. That's so impressive. Nice job. Thank you. that's assuming the stock doesn't go down. No, sorry, Ross. Stocks always go down. Always. 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 They go up, they go down. They do two things and only two things. They go up, they go down. That's it. It's a 50, every day it's a 50-50 shot. It goes up, it goes down. It's one or the other. They always go down. They always go up. It just depends. Look at this. Down, up, 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 down, up. That's all they do. They go up, they go down, they go up, they go down. Find a good set of stocks. Remember, step number one, find a set of stocks that you like. If you like it and you want to own it, and you're okay if it goes down from when you bought it, create a list. Take the list, throw it into a calendar. The calendar will tell you when to buy it, when to sell it, based on the calendar and the chart. Down, now she's going back up again. That's the time to buy, in my humble opinion. But don't listen to me. Make up your own mind. Does it make sense? Do I like this company? Do I like this company at this price? Does it make sense? If I'm buying it at 1931 and I'm selling it at 19, I'm collecting this. Is it a profit or is it not? Is it worth my time, my effort to put my money into it, or isn't it? It's yes, no. You either like it or you don't. Nixer. Oh, did we already do Kroger? Dr. Dev, I love Kroger. Hold tight. Do you place a trade same week dividends get paid or 2 weeks before? Why? 2 weeks before to give the stock time to move up. Most dividend stocks, especially the ones that have been around for a while, have a tendency to increase in value just before the dividend is paid. If you want to know the exact dates, you need to go into the data stream. Take a look at the dividend, count back however many days, and does it consistently make the move? All the information is free. You just got to know where to find it in order to use it. All right, so Dr. Dev wants to take a look at Kroger. Now, guess what? Kroger was never on my list. I got Kroger added to my list because Warren Buffett had it on his list. Think about it. It's good enough for Warren Buffett. It's good enough for me. Here's the top a couple of weeks ago. Here's the bottom last year. Shoots up, pulls back, shoots up, pulls back. What's going on here? The new bottom, now she's turning around. Well, let's take a closer look at that. Does that make sense? Does that look appetizing? Well, let's find out. Before we do, 68.20. All the 68s are going for $2. Hell yeah, that's almost 3%. Why not? Well, let's take a closer look. A year ago was the bottom, 50.69. The high was a couple of weeks ago on the 11th. Okay, and that was 74.90. Last 30 days, here you go. High, low, where was it? Where is it? Up, down, up, down. Bummer. Here's your bottom here. 2 days to the upside. Today pulled back a little bit. But if tomorrow is higher than right there, I'll jump in because that's the third day to the upside from the bottom. That's my rule. You have got to figure out what makes sense to you. Don't listen to me. I'm just some idiot on YouTube or TikTok or wherever you're listening from. Most of you don't know me. There's a few people that have sent me their phone numbers. I have called them. We've had conversations. And trust me, you don't have to trust me. I don't know why I said that. I guarantee it, that doesn't mean anything to you either because you don't know me. I promise you I'm not going to try to sell you anything. You want to send me your number? I will give you a call. After I call you, I delete the number. I don't have it anymore. But you have my number. You can send me a text. Okay, I call someone, great, we have a conversation, I delete the number. I don't try to sell you anything. That's not what I'm about. I honestly really don't care about the money. I'm at that point. I'm going to give you a quote from the movie with, what was it? Hold on. Conan the Barbarian. Yeah! At a point, there comes a point in every man's life where jewels cease to sparkle. Diamonds lose their luster. Gold is meaningless. He's talking about life, and life changes. As you get older, certain things mean less. More, it means more to me to spend time with my 5-year-old grandson. Can you imagine the conversations we have? You talk about total nonsense. You get someone 61 years old, has a lifetime of experience, trying to talk to a 5-year-old. How much can I start with? Now, my grandson has his own account. He started with $50. Granted, he's 5 years old. I do all the trading for him. But it's for him, it's dividend capturing, different strategy. But kind of the same rules. We don't do covered calls. We do dividend capturing because he doesn't have enough money to do that. Next, sir, do you place the trade? Okay, we already talked that one. All right, got that one, got that one, got that one, got that. SCHB. Ali, what is that? Is there any growth stocks you would recommend? No, I don't do any growth stocks. None. Zip, zilch, zero. If you're looking for growth stocks, you are definitely in the wrong place. I don't do growth stocks. It's not what I'm looking for. I'm not looking to grow my money. I'm looking for a safe, predictable, consistent income. I'm 61. My money's going to come from somewhere. And if I give it to a money manager, he's going to give me 4% a year. Do you have any idea what 4% a year is? Let's say I got $1 million. 4% a year is 40,000. Think about that. 4% a year on $1 million is $40,000. That's what they say you can get safely. Well, fine. Okay, that's at $1 million. 40,000. Well, $80,000 will give me $800 a week, which is $40,000 a year. And it's a hell of a lot easier to get $80,000 than it is to get $1 million. I didn't go to college. I don't know why the hell you're listening to me. SCHB. Ali, what is that? SCHB. SCHB. One more time. Okay, sorry, Ali. I don't do monthlies. September, October, January. No, I don't do monthlies. The numbers just don't work. Sorry. Christina Gen X. So basically, buy, sell quickly, and thus not owning the stocks. Kinda. Okay, look at it this way. There's 10,354 different companies out there. And they are all looking to do the exact same thing. To be higher tomorrow than we were today. So you don't need all of them. You just need a handful of good ones. So let's say I look at just 300. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list. That's about 300 stocks. Now let's say hypothetically these two stocks are moving forward nicely. Great, I jump on those two. And then all of a sudden they get to the top and they start moving back down. Okay, great. Well, there's another two right behind them going because they all move at a different speed, at a different pace, in a different direction. But they're all going the same way, looking to go higher and higher. Okay, sorry guys, I don't know either one of you, so I'm going to decline the co-hosting, but thank you. So just think of it that way. Okay, if you got a list of stocks, hold on, I'm going to show you this. Let's get rid of this. Okay, all of these, you count them. 74 here, there's probably about 20 there, about another 20 there, 56 here, about 15 here, about 12 here, about 18 here, another 16, 48. That's a lot of companies. Every single one of these green dots represents a company that has consistently increased its profits. And they're paying out a dividend, a portion of their profits to their investors. So let's say I buy this one. I collect that dividend. Great. I buy it, collect the dividend, sell it. 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 Same thing over and over and over and over again. Over and over and over again. Okay? LIDR. What the hell is that? LIDR. LIDR. Hell no. That was quick. Claude, what's happening? Claude, believe 86. How are you doing? Claude Cook. Is that actually a ticker symbol? It is. Claude, no. September, October, December, March. I don't do monthlies. They just don't work. Dev, thanks for checking out KR and Verizon. You're welcome. User, yes. What's the good amount to start with? I started with 12,000 30 some odd years ago. Cincinnatus, woohoo! Thank you for the flowers, dude. That's very nice of you. Daisy, do you like Schwab for handling your money? Nope. How do you like that? Nope. What's the main indicator you look for in your right screen? See, the funny thing is this the right? Or is this the right? Okay? It's either the chart or it's the numbers. It's one or the other. Because I don't know which perspective you're talking about. That's my right, which is the chart. Now, from your point of view, that's my right, which is the numbers. So when you ask a question, you got to be more specific, because I'm not quite sure what you mean. Hayden, Mako, Aeon. Ooh, Aeon wants to take a look at Home Depot. Check it out. The high, the low, where was it? Where is it? Up, down. Sorry, dude. It's coming down off of a high. Okay? Here's your bottom right here. 355 shoots up to 415. Now it's going backwards. Don't get me wrong. I love Home Depot. Home Depot is a dividend king. More than 5 decades. That's 50 years of increased profits. Dread. Nokia. Really? I don't think I've done Nokia in decades. Oh, $4. But take a look at this. Bottom here, up here, gaps up. What do you think is going to happen next? Usually with a stock like this, you got a bottom here, $4, shoots up to 435, pulls back and has a gap up like this. With a gap up like that, usually there's going to be profit taken the next day. Usually. And at $4, 35 cents, that can't be right. Oh, 434, the 450s, $2. Oh, hell no. No, the numbers just don't look good. Sorry. Bill, okay. 2 weeks before payment or 2 weeks before announcement. Bill, hold that thought. All right, Mr. Bill, you ready? EX dividend calendar, September 2025. Each one of these little green dots represents a company getting ready to pay a dividend. The little green dot represents the EX dividend date. For those who don't know that, there are 4 dates to remember. Date number 1, the announcement date. Good afternoon, everyone. This is James from Dividend Stock Talk. We made this much money this year. It's how much you're going to get. Basically, they're telling you how much you're going to get and when you're going to get it. It's the announcement date. Hey, this is what we made. This is what you're going to get and when you're going to get it. It's the announcement. That's date number 1. Date number 2, the EX dividend date. The last day the stock trades before the dividend is paid. If you want to collect the dividend, you got to buy it before the little green dot. Let's pick a good one. I don't even know some of these. Ooh, R Gold right there. If you want to collect the dividend on R Gold, you got to buy it before this date. This is the 3rd of October. The 2nd, the 1st, the 26th, the 11th, the 16th, the 2nd, any day. Any day before this date. That's the EX dividend date. Last day the stock trades before the dividend is paid. Date number 3. Date of record. Whoever owns the stock on the date of record is entitled to the dividend. Plain and simple. You own the stock on that date, you get the dividend. Not after. Date number 4. Payment date. That's when you get your money. Payment date. Next, Daisy Poppy. Need to know I'm ignorant about doing any of this new widow. Ooh, I'm terribly sorry about that, Daisy Poppy. I'm sorry that you're a widow. If you want, okay, my girlfriend was a widow before I met her. She knew absolutely nothing when I met her. Nothing. Her husband took care of everything. So now I had to teach her everything. You want to chat? Send me a number. I'll give you a call. I guarantee you, I promise you. I know it doesn't mean anything because you don't know who I am. But if you do send me a number, I will call you, and I promise you I will not try to sell you anything. I'll just listen to what you have to say, and I'll give you a few ideas. You can do whatever you want with that information, okay? Hello, world. Hi. Also, what is that screen with the stylus? It's pretty cool. This is called a vibe screen, which I really have no idea how to use it other than, that. But I'm supposed to hypothetically be able to take my hands like this and make it bigger. But as you can see, I don't know how to use it yet. I saw it looked really cool on the ad, because the ad looks cool, but the ad doesn't tell you how to do it. They want me to read that manual. I don't want to read the manual. Also, okay, got that one. R Bump, how are you doing? Firecracker, good evening. Hello, world, first time here, loving your content, keep it up. Why, thank you. All right, next, what do you have over here? What's the chart with the dots? Think what's wrong. Oh, this? This is an EX dividend calendar. It's Meta, a good buy for the next week. Now, I don't do Meta. I don't do Google, okay? They only have 2 years of dividends. That's it. Okay, let's keep, what do we have? I just started watching you and following you. What's the incentive if you don't even notice? I'm not 100% sure what you mean by that. I just started watching you and following you. What's the incentive if you don't even notice? I have no idea what that means. No, I understand the words individually, but the way you have them grouped together, the first half, if you don't even notice, what does that mean? R Bump, how long do you need to hold to collect a dividend? 2 days. You buy it before the EX date, you sell it after the date of record, if you just want the dividend. But remember, okay, the market maker knows that. So he does price it specifically for that. So stocks have a tendency to go up just before the dividend date. After the dividend date, they have a tendency to go down. So that kind of information is important to have, or to understand at least one or the other. 5 minutes left. That means time for the chair, and time to get comfortable to answer some of these questions. So where are we? So we got those questions done, these questions done, those questions done, these questions done. YouTube, I feel bad for the YouTube people only because there's so many turds on YouTube. Now, don't take that personally, guys, because some of you are honestly here to learn, but there's a lot of people on YouTube that want to, let's say, get a rise out of me, piss me off, throw me off my game. Do whatever you want. You like MST. I have no idea what MST is. That probably gives you an idea. If I have no idea what MST is, well, most likely I don't trade it. All right. What else do we have? Do you get dividends and then sell in the money calls? Tuck. There's a huge misconception from what you think you're reading and what you're actually reading. Okay, so the name of the show is Dividend Investing for Weekly Cash Flow. Well, I'm looking for weekly cash flow, and I use dividends as an indicator to tell me what stocks to buy and when. I'm not really looking to capture the dividend. No, don't get me wrong, I'll take the dividend, but it's not what I'm looking for. Because a dividend just tells me when the stock is going to move. And if the stock moves predictably, I get in and I get out before the dividend is even paid. Because remember, most of the time stocks go down after the dividend is paid. So I don't want to hold it into that time frame. But every once in a while, I do get dividends. But it's not my main focus. It's an indicator that I use to tell me when to look. All right, where are we? Nancy, good evening, Nancy. Weekend Warrior. Does that pattern all the time? I'm not quite sure what you mean by that. Does that patent what all the time? John Valentino, good evening. Ingrid, good evening to you. Hello, world. I meant the main indicator in the option chain on your right. Hold that thought. The option chain? There is no indicator on the option chain. Okay, when I choose an option, it's always going to be a numbers game. Now, what do I mean by a numbers game? What am I buying the stock for? $4.43. The closest strike price to $4.43 is going to be $4.50. It's the closest one. Because the closest one is usually the one that's going to give you the highest rate of return. Any particular information from the Greeks? No, I don't pay attention to the Greeks at all. Do you like TYSS? All right, someone, 1, 2, 3, 4, 5, 6, 7, 8, 9. You know, your parents were very ingenious when they named you that. Someone, what's your kid's name? Someone. Mama, hello, James. Can someone who lives in UK do this? Okay, yeah, you can. But Mama, you're going to use what's called a VPN, a virtual private network, because the powers that be don't want you taking advantage of what we got over here. So a VPN disguises your computer and allows you to come in through the back door. Not that I condone that kind of behavior, but you know, that's what you can do. Okay, we'll DM you my phone number. Daisy Poppy, thank you. TYSS, I've never even heard of it. TYSS. No such thing, okay? We cannot find that symbol. Sorry. DJ, sorry, I'm just joining, but what are some dividend stocks that are worth researching? DJ, hope you got a pen and paper. Mascara, lipstick, write it on the wall. You ready, DJ? Here we go. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list. Go to Google. Dividend Kings list 2025. Boom. The list pops right up. Dividend Aristocrats list 2025. Hit the button. Boom. It pops right up. These companies, Dividend Kings, 5 decades of increased profits. Dividend Aristocrats, 25 years of increased profits. Dividend Champions, quarter of a century increased profits. Dividend Contenders, 10 to 24 years increased profits. And then, of course, taking up the rear, if it's good enough for Warren Buffett, it's good enough for me. Those are the companies that I like. I live in Canada. Can I use PFE? Yeah. Dr. Dapo, or Mr. Dapo, sorry. Yes, you can. Short cryptocurrency. No, I don't do crypto at all. How does one set up? Okay, we already did that one. ECAT, BCAT, we did those before. No. Your auto assistant, ECAT, ECAT. Okay? No options, no thank you. BCAT, same thing. No options, no thank you. I can't get weekly cash flow with a company that does not have weekly options. No, there isn't on my end. Sorry, Joey. UTLY pays almost 90% weekly and dividends. If that's a trap, I'll take it. Hey, short currencies, why don't you take a good look at it? Seriously, take a good look. How consistently profitable are they? How long have they been in business? Not even 2 years. It's whatever you think it is, you do what you think is best. User 222881. Okay, whatever. Are you on YouTube as well? Yeah. I get 3 channels on YouTube. Right, what else do we got? Peter, how are you today? Where did you go? Right there. Zach Chad, my thoughts on the wheel strategy. It's a great strategy. A little bit more time consuming. So instead of 2 weeks before I buy, I got to go out 4 weeks. Because you got to let each strategy take its time to play out. So the cash secured puts, well, you got to do that before the dividend. because it goes down. That'd be great. You do it right after the dividend because the stock goes down. And then you buy it and then you do a covered call. Well, great, if everything works right. DJ, it makes sense. Way to go. Someone. So do you like TSY? No. TSY doesn't make sense at all. Aries, you sent my phone number. Good. I'll give you a buzz tomorrow. TSYY, totally different story. TSYY. Hell no. What about that makes it look good? 26 down to 8? No. What about that you think makes that look good? Adder Baraham. Dividend has higher tax than capital gains. Yeah, if you like paying taxes. Think about it. Do you like paying taxes? Here's one for you. In that big fat book, okay? In that big fat book, there is a phrase in there that they will deny up, down, all around. You can even take it out of that book, photocopy it, and show it to them. Every dollar you give to the IRS is considered as a gift. Look it up. It's in that book. Calibri, hey, dude, I haven't seen you in a while. Why can't I see exact profits I made on my covered calls in Thinkorswim? It's buried somewhere. Can't find it. Yeah, dude, same thing. We actually called Thinkorswim. We actually called, hold on, Charles Schwab. We called Charles Schwab and we asked him, where are our dividends being shown? Where are our covered calls? Where's that money shown? It goes right to the cash assets. So if you make a dividend on TSYY or TSLL or Ford or whatever, it doesn't go towards your Ford stock. So you say, hey, Ford, what did I bring in on Ford? No, it goes right into the cash account. So you don't get to see what it is. You have to go and put it into a spreadsheet and individualize each position. I don't like the, that's one thing I don't like about Thinkorswim. The allocation of the profits. It's not where I want to see it. Okay, if I make premiums off of Ford, well, I want that under the Ford catalog. I want look at what do you call it? One column for every trade I made on Ford. And I want to see the profits and losses on Ford. I don't want all my profits on Ford being thrown into the soup mix. No. But, that's just the way it is. Macasaurus, how are you today? Bro, sounds kind of like Saul. I have no idea who Saul Goodman even is. What's the name of your YouTube channel? The 10MinuteTrader. Every single video you've ever seen me do. Hey, this is James from Dividend Stock Talk, brought to you by The 10MinuteTrader. Look it up. The 10MinuteTrader has been online for over 20 years. Okay, I have videos going all the way back to 2011 and 2012. I've been around. I think I'm done. All those questions done, all those done, all those done, all those done, all these done. Blueberry drip. Oh, I love a good, what do you call it? What else does he have to say? Already did that question. Okay, card, please don't get fooled. Blueberry drip, I have no idea what you're talking about, but okay. Okay. K. Juan, thank you. Buy Wig 20, I have no idea what that is. F. Charles Schwab, okay, don't like that one either. How much have you made this money from trading? Okay, a little inappropriate question, but okay. Don't believe this guy, he'll leave you broke. See, blueberry drip, I'm not quite sure what you mean by that, because not once have I ever said anything about anyone buying anything from me. So you're just spewing negative crap because you can. Okay? You want to give me your number? I'll give you a call. We can talk right here, right now, live. And you can give me whatever you got that you think that you're so right about and I'm so wrong about. So will the crypto guy blueberry? Okay, whatever. Do I like subbing calls? Yes, I do. When do you analysis are you including fundamentals? Absolutely. Okay, so KC Bellis. Okay, before I create a list, okay, when I create a list, I look at the dividend kings, dividend aristocrats, dividend champions, dividend contenders, blah, blah, blah. I take a look at them. And then when I do take a look at them, I take a look at the profitability over the last 5 or 10 years. Well, I take a look at the dividends. Have they increased for the last 20 years? Well, they wouldn't be on the list in the first place. So they are consistently profitable right off the top. So that part I don't have to look at. What I do take a look at is the book value and the revenue per share. What do those numbers look like? And once I go through those numbers, I never, ever, ever have to look at them again. Because once you look at, let's say, Microsoft, well, Microsoft has been profitable for the last 25 years. So why would I look at it again this year if they're still on the list? Until they come off that list, well, they have to be profitable to stay on that list. Okay, so every year I update the list. Dividend Kings, great. Are there any new Dividend Kings? Did somebody get kicked off the list? Okay. Boring isn't bad, even better if you're making money. Okay, Mark Sultan, thank you. Can I download the software to my computer? Yeah, Manolo, this is free to download. It's called Thinkorswim. You just download it to your computer. However, at some point in time, they will ask you politely to open an account with them because you are using their software and you are using their stuff. You know, it only makes sense. I mean, I do my trading, most of it through Thinkorswim, and I do have an account with Robinhood because I like the fact it's right there at my fingertips. It's simple, it's easy. But there's a lot of things about Robinhood I don't like, but most of it I do. Louis, SOXL, I'll have to check it out later. Aside from Thinkorswim, is there any app that I can use in Canada? Okay, Mr. Dapo, I really don't know. To be honest with you, I'm not familiar about the Canadian market. All right, so I'm done with all the questions. So that means I'm done for the night, and we're going to do this thing all over again tomorrow. But here's the thing. Tomorrow's Thursday night. I don't do Friday nights, and I don't do Saturday nights. Last year, it was 7 days a week. I missed 6 days. Let's see if you could do that. Talk for 3 hours every single day for 360 days. Every single day, 3 hours, stood in front of the camera. Oh, check that out. Thank you. All right, I'm done for the night. You guys have a great day, and we'll see you again tomorrow. All right, done over here. All right, bye to you guys. Done and done. There we go. Done over here. Thanks again, Brody. Done here. There we go. And end. There we go. Over here, stop broadcasting. There you go. Over here. Thanks, guys. Have a great night. Done. All right, come on. Done and... Ooh, what the heck is that? Nope. Why can't I see it? There it is. Okay, and now, and here, done. Cool beans. Done over here.